All right. Now we understand that the entry point into a stock obviously is buying. Now, when you look to be able to buy a stock, you probably have your own reasons for buying it. Of course, we have a goal. We all want to buy that stock that will skyrocket, right? And so, in our ability to do that, we might be able to look for quite a number of things to be able to make that assessment. We could look at the fundamentals of a company. We could also look at or listen to gossip, people telling me that something might be happening on the stock or whatever. And of course, you can also consult your technical conditions and let it tell you a particular story about what is to happen as well. Now, why do we want to rely on some of this? I think a good trader will have his ear on the ground. I don't really mean that you can just use technicals blindly only. You don't have to do that. But you can use certain things that you can hear. But I want you to be able to filter them to the technicals because that's what it's there for. So although you may have your three reasons to buy, fundamentals would mean you're buying cheap, fast-growing companies. Maybe the business has a new storyline to talk about, or it could be a turnaround situation that could add value to it in the long term. And this is a reason why you want to be able to look into a stock. In terms of gossip, yes, you could listen to stories about insider buying. It could also be a thing you'd be hearing about takeover targets. It could also be aligning itself for a special nice cash or stock dividend that may be coming out. Or who knows, maybe they're rumored about this company entering into a new deal or contract that will be able to catapult their business line into something that's a bit more formidable. Now, when you look into the technicals, whatever it is that you're using, the technicals should become your filtering screen here. And the reason you want to filter this is because you want to make an assessment of what you're jumping into. Since technical analysis allows you to be able to trade and make the most of time out of it, then timing issues are the ones that you have to make filters for. Is this stock in an uptrend first and foremost? Can you imagine if you're buying a fundamentally good company, every day that stock drops becomes even a better price point for you because it becomes cheaper. However, the technicals would argue that as that continues to fall down, a downtrend is still very much in place, and it could take a month, it could take 2 months, it could take 1 year, it could take 3 years before that stock were to be able to finally climb up, right? So you want to be able to use many of these technical conditions to filter your trade. Is it breaking out? Are you now in a support condition where it might be a potential buy? Are the indicators telling me or aligning for a potential buy point? Or who knows, maybe some of diverging signals in your indicators are telling you, okay, enough is enough into this decline, it might start to reverse. So the technicals are there to police what you do with all the others and make sure that you follow these systems well so that it can try to take hold and try to prevent your emotions from taking too much out of you. And so try to be able to understand that the technicals here are filters. It's up to you if you want to buy a stock using fundamentals, but use the technical filters to be able to do it. Another way some people could say it is, I choose my stocks fundamentally, but I time my entry and exit technically. And that's where the complement becomes quite useful. All right, there should be two reasons why you want to be buying your stock. And the technical conditions really are drilled down to two. The first is what we call a valid breakout. Now, if you recall in an earlier session, a breakout is simply a wind up in prices in an area pattern, and you will see prices bust or force its way above the resistance line, which is what you see over here. And this breach of that resistance after a wind up is what we call a breakout. Now, the reason I put the term valid here is because some of you might want to be able to confirm that. It could be a breakout that has volume. It could be a breakout that has a certain price. It could also be that the momentum signals are starting to be with you. So try to be able to confirm the breakout condition so that can lend a hand in making sure that this is more likely to move in that direction. Now, the second thing that you also want to look at is obviously the support rebounds. Now, the reason why support rebounds are also quite good is because it actually gives you a good risk reward. And the reason is because whenever a stock, let's say, rebounds from here, coming off a major support area, you know that there's a heavy amount of demand protecting the stock from falling. And so if you buy it at around this price, this is the maximum amount of risk that you're willing to take, right? In a breakout condition, it's a bit more riskier. only because you have to be able to buy the stock as it's already moving up. And if the prior low will all the way down here, or let's say later we'll introduce a system to stop it at the mid zone, it's a little bit more riskier, but the potential for it to move up is still quite substantial. And it's the reason why we look at this as a potential buy, and rebounds from support as your next potential buy. All right. Aside from these common entry conditions that we want to look at, now we want to add into the filtering element. Now in the last webinar, we talked about technical indicators, and I want to show you how to be able to add these two together. Now since we talked about the moving average, the MACD and the RSI, let's just lay all the three out. And now, assuming we have a breakout condition happening, or we have a support bounce taking place, we will now consult these three indicators to see if they also are suggestive that we should take the trade or not. And now, assuming that we use these three as our added three different guides, now let's look at it as if it were a checkbox, and we will ask the basic question. Is the stock price above the moving averages, particularly the ones that I am following? So for example, if I am trading in the short term, then you should be consulting the 20-day or 50-day moving averages. If you're looking for something more medium term, then maybe you want to look between the 50, 100-day moving average. And if you want to look at something longer, then maybe it should be over 200 or 400-day in terms of the moving average. So I'm assuming, let's say I'm trading into the short term. So now my question is the stock price trading above my short-term moving averages, which is a 20 and 50-day? If they are, then I will put a check mark here. Next, we go to the next indicator, the MACD. Now, if you recall last time, MACDs will give us a buy or sell trigger, plus it will also tell us whether it is above or below what is known as a zero line, which tells us whether it is a positive or negative trend. And the buy signal we want to get is a buy signal that also is above the zero line. So do we have a buy signal above that zero line? And if we do, then we will put a check mark here. If I have a buy signal that's below the zero line, then I will put this X. Or if I have a sell trigger, I will also put this X. And finally, we have the RSI. Now in the RSI, you're going to ask yourself two questions. One, is a stock overbought or not? And two, do I see divergence? Okay, so if I see, for example, an upward moving stock and I see it's not overbought, then maybe I can put a check mark here. And also, is that upward move showing no divergence? Now, if I see it's either overbought or it shows divergence, then I will put an X mark, and that means no, it doesn't fit the situation. Once I put my checks or X's in place, now you will make your assessment of the condition. Let's use this color code to give us some better regard of that. So the stock I'm getting ready to buy happens to be showing you that prices are above the moving averages you're following, check mark. If it shows you a buy MACD above the zero line, another check mark. And an RSI that's not overbought and shows no divergence, then another check mark. If you get three checks, the three checks give you a green light, that means go. Go ahead and buy this stock because it's confirmed by your three indicators. All right. Now, let's say you get an imperfect trade. An imperfect trade means you don't get all check marks here. So let's say, for example, you get one check mark, but the other two says no. All right. So that means you say only one indicator is in my favor, but the two say no. So since only one indicator is in my favor, that shows me a red signal that tells you not enough confirmation to make this a viable trade. And so we'll hang back from that trade. Okay. Now, if you get something in between where you get two check marks and only one cross out, then you get a so-so trade. Now, you may take those trades or not. That's not really up to you. I think your expertise here will tell you which ones you can be a bit more early. But all that simply means that if you get a so-so reading that one of these things are not in your favor, that means that be prepared that you might get a little undertow there and that some choppiness might come out. It will not be an easy trade to be able to make. And that's why I would regard that maybe more of the stock experts might want to be able to take entries from so-so type of filtered trades. Now, if you do all your filtering and you have a breakout or a support rebound, plus you've got three indicators in your favor, go ahead, take the trade. If you have a yellow reading here or two signals, go ahead. Maybe what you want to do is reduce your volume just in case so you don't get too much shaken out. But if you only get one reading, look for another stock. This is not what you want to be looking for. You want something that will give you better hand of what's about to happen. And having too little indicators in your favor means that you're coming into a non-viable trade. It is an imperfect trade, and do expect imperfect results. Okay, let's try to be able to make an assessment of this. So I know that's all concept. Let's put it now into practice. So let's say, for example, I have a stock here. This is Maxis Group, and I have it plotted out against a 20, 50, and 100-day moving average. Now, it's coming off a declining trend here, but I want to show you that the downtrend line has been broken. And so we got a little bit of a resistance break here, and now prices are pushing towards a 50-day moving average, but has not broken it. So remember, short-term moving averages are this one and this one. So if I'm a short-term trader, I want to really see that these two moving averages are broken before I start launching myself into an issue. Excuse me. Now, let's check. What am I trying to make an assessment of? So in my checklist for situation number 1, I have a potential breakout condition from a downtrend, right? And I have prices standing below the moving average. I have my MACD here, which is showing a buy signal. However, it is below the 0 line. And 3, I have the RSI, but it's not triggering an overbought condition yet. So let's try to put our check marks on this list. So I'm dealing with a breakout situation, the breakout from here. Now, my moving average is telling me no, prices are not above it yet. So I put an X mark here. My MACD is showing me an imperfect situation because it's a buy situation, but it's below the 0 line. So I will also put an X mark here. And the RSI is telling me it's not overbought yet, so it doesn't look that stretched. I put a check mark here. So if I tally up, 1 X, 2 X's, and 1 check mark, that's only one positive flow with me, and that gives me a red mark. I will not buy this as of yet. Let's wait for the second situation. Okay, so what happens now? And if you had followed do not buy this, look what happened to the stock. You notice it fell back down. See, this is the reason why sometimes you really have to give it to what the moving averages are telling you. All right, now we're in a second situation. And as I draw a new downtrend line here, we have another punch out in terms of prices. Furthermore, before this punch out in prices, look what happened here. Prices recovered first. They consolidated right underneath the trend line. It showed a higher low than the previous one, which is very important. That shows you support has just been raised here. And that it also will limit any risk you take, especially if you're buying in this area, because your risk is no longer this low. Your risk is now raised to whatever the previous low was here. Okay, so let's try to analyze the situation further down. So it's now attempting to push off the moving average, but your MACD still in buy mode, has not gone over the 0 line yet. And the RSI tells me it's not overbought either. So let's do our check and X's again. So here we still have a breakout condition because you're breaking off from a downtrend line. We're also coming from a support bounce because it made a higher low over here, which is also good. Next, the moving average, since its prices seem to be just jumping off it right now, that gives me now a positive check mark. But the MACD right now, it's still not what I want, so I put an X mark here, and the RSI still tells me that's fine. It's not overbought. It looks something I can look into. So now I've got two indicators in my favor, the moving average and the RSI in my favor. And so now here's that so-so capacity. I would suggest you take it, but again, like I said earlier, reduce your volume because it's not a picture-perfect trade. But just in case you want to be able to launch yourself a little early so we don't have to pay maybe a big price just in case it continues, at least you were able to put in some position in here. Now let's see what happens to the stock. So look what happened. So it punched out, it tried to free itself for 2 days, and then it failed and it shot itself back down. Now, remember, when I buy this, you will find these rules later when we talk about support stops. I will still not sell this issue unless I am told to get out. And the reason for that has not been shown yet because the support is still down here. So I will try to hold on to this. But now the question I would ask is, assuming I didn't buy this because I was presented this so-so situation, what would be my next window to try to buy? Now let's make this assessment here on this third attempt. On the third attempt, it did pull back. It did show a higher high than the previous one. All right, but prices did come out to be able to move here. There is no breakout from a downtrend anymore in this case. And as we check the MACD is actually breaking over the zero line now. You can see it's slipping over. And the RSI is telling me it's not oversold as of yet. So let's do our checks and pluses here. So what am I buying from? I'm buying from a support rebound, my moving average in my favor because price is now moving above it. MACD is also now positive, and that also gives me a good reading. And the RSI is telling me it's not overbought yet, which also tells me a good reason to be able to enter. So now I'm in a situation where I've got all three indicators in my favor, and all three indicators raise a green flag. And that tells me that looks like a much more better opportunity for me to be able to buy. And let's see what happened to the stock. And so you can see, as if things are more aligned, the tendency for prices is to move into the direction that you really want to do. And that really gives you a good avenue of why trade filtering becomes very important. So remember, I'm trying to look for a reason to enter. Now, you might find some imperfect conditions every once in a while, and that might be able to lead you to be able to make a very good estimate of whether you think this is going to continue or not. Experience will count in due time, but allow the trade to be able to be filtered through your indicators so that you can make a good assessment of your environment. And as you can see in this case, if I only entered into the third situation, hardly any waiting time, hardly any pain into the downside, and I saw something a bit more robust in terms of the result output. And this is why we have to be able to justify the filter of the trade into this capacity.